We're in that part of the crypto cycle where if you have a look at the banter bubbles charts over here, the hourly, daily, weekly, and the month, a lot of people have lost a lot of money. So in today's show, we're going to go through 5 specific ways that you guys at home can focus on not losing money within crypto. If you follow this 5-step process, you should be well on your way to riches, right? You should hold onto your profit for the duration of the bull run, and you should be adding on risk at just the right time. So without further ado, smash the like button, hit the bell notification, and subscribe to the channel. And let's get into it. Since this is a weekend stream, I've been putting in a lot of hard hours and work for you guys over the course of the weekends. So smash that like button if you do appreciate that, and we'll get straight into it. But first, I want to have a look at the overall market conditions, and then we'll get into some of those pointers which will help you to properly allocate at the right times within the market and consequently reduce your chances of losses. So let's get into it. And before we get into it, I want to know your viewpoints over here. Is your crypto portfolio up or down for this cycle or this year? Not the cycle, this year specifically. Is your crypto portfolio up or down? Please vote over there, up, down, or no, you don't have a portfolio, you just trade. I would love to know your guys' thoughts, and then we'll revisit this towards the end. I think it will be super useful data. And then I think there should be a lot of people there probably that are saying your portfolio is down. If we look at the monthly gains, a lot of people came into the market late. And consequently, I think this is a good way that, we can help a lot of those people. So let's get into it. I need to quickly turn something off here on my computer. There we go. So it doesn't pop up all the time. And let's get into it. US home prices just hit a new all-time high in May. That data came in. That was one of the economic data events that we're waiting to have cleared. And ultimately, this is actually in alignment with that 18.6-year real estate cycle, which does suggest that home prices will become higher and higher and higher. And consequently, people tend to buy the top, right? So they tend to move into this phase, which is called the winner's curse. So for those of you at home, if you do want to learn more about this, look it up from Phil Anderson. I also know that Jason Pizzino has written a great thread on it over here. But more or less, we're situated where my cursor is around about here on the screen, just about to move into that blow off top phase, which is why we've seen the stock markets rallying so aggressively. But what does it mean for Bitcoin? Well, if you look at Bitcoin over here, what's happened in the post-halving cycle. So as that Bitcoin halving cycle takes place, price action usually respects that 20 EMA until the top's actually in for that cycle. And you can see it over here. So I'm going to quickly go through over here. Here you have 62 days following the first halving cycle that occurred in 2012. And then what happened to price, right? Rallied towards the upside. You did have one temporary test that came into this zone, and then it continued to rally. And then the next time it was lost over there, and the 20 MA started to angle towards the downside. Well, that showed you that you're in your bear market, and that continued to hold all the way down until the next halving, where price got back above 62 days later. You had a test into that zone, rallied towards the top side. You put in your cycle top, you lost that level, and then you came into the next one, which was over here in 2020, was the COVID halving cycle. You had the dip from COVID, or at least the not the dip, but the major crash, reclaimed that level 62 days later, coming in to test it, and you went into the cycle top, temporarily lost it, had a double top in that cycle, and this is where we currently at within this cycle right now. As mentioned, this is where we're at now within this part of the cycle, 2024. Here it is. Price has come 62 days later after the halving back into that 20 MA to test that level, and we're looking at onwards and upwards continuation from the zone. So therefore, should you be fearful? Well, ultimately not really, right? If you have a look at this chart over here, you can see that price right now, if we zoom out and we look at the key levels, we caught right at the previous month's mid-range, which is pretty significant. That's a key level. We also have the 21 exponential moving average rising up into this region. And personally, I am bidding this region. What is bidding? Well, I'm buying into this level over here because this is the final line of defense for the bulls. So we'll go through the reasons why. It is a dangerous zone because price is coming down. So you're attempting to buy the dip. And usually it's better to buy as price starts to already turn, as opposed to trying to catch a falling knife. But I'll outline the rationale and the reasoning for why I'm doing that in today's show. If you do want to learn more about this, by the way, if you want to learn more about how to use this 21-week exponential moving average in conjunction with these key levels, with the previous week's high, low, and mid-range with the previous month's high, low, and mid-range, and how to add this onto your chart. Well, go through into the link in the description below, because if you go through to Whale School, we have 11 days, 6 hours left in which you can sign up. The link is below. Please click and use that exact link, right? There are scam sites that are out there replicating what we have. So please use that exact link. When you click it, it will take you through to this page. Sign up while there is still spots that are available. This is a course valued at $3,000, but you get it for the full price of free. Totally free, right? You don't have to pay a cent if you sign up within time, because it is covered by the sponsors. They're covering the cost of that course. So I want to go through Heinrich's tweet over here, because I think that this is very reminiscent of where we're at within this part of the cycle right now. He says, remember the panic on BTC, and I'll open the charts up, expand on it, and show it to you in a moment. If you have a look over here, right, this was the FTX collapse. Remember the panic there. Price then slowly grinded sideways, and then we started to move up. Remember the panic over here. This was also price coming down pretty hard in that September region. The stock market put in the lows in October, started to grind and continued on up. And then earlier on this year, we had the same thing. And then we had it again just before May. Remember the sell in May and go away. That was the recent lows that we've had. And this is the candle that we're currently printing, where the market is starting to panic. So he says, stop panicking and start analyzing. Equities and cryptos are in a major bubble. And yes, they will crash, right? But they're not going to crash right now. Is this a correction in crypto? Of course, right? But the business cycle hasn't rolled over yet. And that's something that you can utilize to time the tops of the market. So he says, study the business cycle. Have a look at the business cycle, which is increasing in magnitude towards the upside. And that's why you have the stock markets rallying. That's why you have new home buyers increasing as well, because those usually become frothy towards the end of the cycle, but we're not at the end yet, right? So he says, if you don't like volatility in crypto, well, then it's ultimately not your game. This is his viewpoint, right? He's looking at a blow off top for crypto, and then the largest crash ever seen since 1929. So a pretty bold claim. Now, I subscribe to this particular model over here. If we go through to this model over here, which is also a major blow off top for crypto, possibly anywhere between 6 and 18 months from now. And then, yes, a long-term correction that's going to take about 4 years to finish, not necessarily standing by 1929 style crash, but definitely a long correction coming to the end of a major cycle. So it's very important to have your ducks in a row and your charts aligned. And again, this is coming into a key area. So is there a reason to get super bearish on crypto right here, right now? No, because you're coming into key support, right? You're coming in towards those range lows. You're also coming into a high time frame moving average, which historically has bounced price, whilst in the presence of incredibly low volatility as per the Bollinger Bands and the weekly, which continue to squeeze in towards one another. And ultimately, yes, the low time frame trends are towards the downside, but the high time frame trends still do remain intact, and you want bulls to take control ASAP when it comes to having a look at the charts. And this has been the trade plan for a very long period of time. We actually already mapped this out. Once this candle was printed over here, price formed a major low over here, and this is the low that they're talking about in the tweet over here. Remember the panic. Remember the panic within that zone over there. That's exactly what this low looks like over here, and we're expecting into this fair value gap, give or take, whether we get down a little bit lower towards the range low. We don't want to get too greedy on trying to buy the dip, which is why I've already started to allocate into this zone over here. And I've done the same thing for altcoins, because if Bitcoin does start to bounce from this region and reclaim that key mid-range level, which is coming in at $67,600, well, that's where bulls take back full control. And then you can have confirmation that we're playing out the remember the panic scenario once again, right? So remember the panic. That's why here's my trades. These are the trades, right? I've currently started to scale into multiple different positions. You can see my grids. Not every single one has been hit on Bitcoin. I'm scaling into this position over here. I think that of all the trades that I have, it looks like I have 1, 2, 3, 5. So 15 of the 20 orders have been taken within this region over here, and that is on Bitcoin. I also have a position on 𝗕𝗬𝗓, which is a meme coin. I have a position over here on 𝗕𝗬𝗓, and I have a position on 𝗬𝗬𝗓𝗏. All of those trades are currently up, and I haven't fully deployed, right? I'm still looking to gain an entry. I've used what I've labeled the 5-point entry approach. That is also covered in Whale School, right? By the way, if you guys want to know more about that, it is covered in Whale School. So we now officially 100 days into this correction, right? We've marked the correction from once we confirm the top to the lows over here. This has been the corrective phase, which was 23.36% down, totally in line with all the previous corrections that we've seen. And we consider the corrective phase ending once we can clear out those previous highs over there that were set as a local high. So that's marking us 2 days away from the longest correction that we've had within this cycle, within this particular bull run, the 2023 bull run, right? So 102 days was the third correction. That was this one over here. But if you do look at the distance between the second and the third correction, what you'll notice is that you temporarily ended that, and then you immediately came back down after putting in that top. So this is something you need to be aware of, that, well, what happens if this is the correction that we're going through now, that in fact it's a 193-day correction, right? So more similar to a 6-month correction as opposed to a 3-month correction. That is totally in the realm of possibility. But for now, just understand timing-wise, the market is becoming very, very complacent. They're getting bored and they're leaving. We've seen it, right? We see it in the views. You can see it across all the various different channels. You can see it on Twitter with the engagement has come down quite significantly. And this is where you establish your penultimate positions when it comes to trading, right? So if you look at James van Straten over here, this is what he showcased with the funding going negative. He says bears hold all the cards and really should be getting Bitcoin to at least 20% drawdown from the all-time highs, right? Which is, we've already currently seen the 20% drawdown. He says aggressive spot Bitcoin selling on Coinbase has been taking place. Weak miners continue to sell because they can't keep up with the complex equations, right? After the halving cycle, the equations to solve for the Bitcoin blocks become more and more difficult, and consequently those miners fall out. They drop out of the mining ranks and they turn off their machines because it's not profitable for them. It's not worth keeping the machines on because it still uses all the electricity. But if you're not the quickest to solve the equation, then you don't get your mining reward, right? Only the quickest, fastest, most powerful computers and computational power will earn that reward for solving that block, right? So them turning off creates a little bit of an adjustment in the mining hash rate. The mining hash rate comes down, price comes down. It's always been a debate between hash rate and price, which comes first, the chicken or the egg. The answer is the rooster. We've told this joke before. So for those of you who want a quick Saturday joke, there it is for you. Anyway, continuing on over here, you would expect, though, that only lasts for a certain amount of time, and then the old miners will turn back on, right? Once they turn back on, the hash rate goes back up and price will move, right? Right now, DXY, the dollar index we've spoken about as a little bit of a pressure cooker for the crypto market, which as that moves up is causing downward pressure onto the crypto market. So we're still waiting for that to come down. 7 of the 8 past trading days have seen outflows as well from the ETFs, but you can make the argument that these outflows usually come at the worst time, right? Because these people buying these ETFs are even more retail than what you and I are. They're the extreme right side of the retail curve. They're extreme retail because they don't even do it themselves. They use a broker to do it. So when they see their account is down, they bail out of their positions, the ETF flows go negative, and that actually sometimes marks the bottoms, right? And the funding rate is just turned negative, which is exactly what we're seeing over here. Now, when you see that on Glassnode, which is an on-chain metrics side, then you know that this is very, very close to the bottoming process, right? You can look over here, negative funding in this zone over here. Their price came down temporarily after that and then immediately started to bounce back and reclaim. And you can also look over here on High Block Capital. Let's just quickly let that load up again. Now you see my whole computer is reset, guys. Let's just quickly let that load up again. It shouldn't take too long. High Block Capital, what you'll notice once it does load up over here is that a lot of the coins, so we'll let that load up, a lot of the coins are negative as well. There it is. we have on the top left over here, I have Solana. Look at the negative funding on Solana. A lot of people trying to short Solana. If you look over here at Bitcoin, very, very negative on Bitcoin, right? If you look over here on ETH has been performing slightly better and holding up a little bit better than what Bitcoin has. This one's been chopping between negative, positive. If you zoom in over there, it's starting to slowly print negative. Near on the bottom right is positive, right? WIF, negative. PEPE, positive. So the stronger coins are going positive first. That being, for example, PEPE has been one that's outperformed the majority of the market. But what this tells you, the story that this tells you, because you're trying to read the tape of the market, right? All these different things give us clues as traders, and then we use those clues to form a bias and look for an opportunity to build either long or short positions. So what I'm trying to suggest and say over here is that if you have a look at this, what you're seeing is that we are coming into very, very key support, as I've shown you over here. This is a key critical level. And while simultaneously you have a lot of these market participants running shorts at the worst possible time into key support, that's where you look to counter trade it. You don't look to counter trade in a strong trending move, but you look to counter trade in two different places. One is coming into, if they're going short into support, or if they're going long into resistance, that's one way that you look to counter the trade. And the other way is that you look at the extremities of a trend. When that trend starts to bend, right, you're coming towards the end of the trend. I don't mean to rhyme around here, but that's literally the saying that when the trend starts to bend, you may have reached the end of that trend. So when you see that slowdown phase within the market, that creates the opportunity to start to look for the longs, and risk to reward wise, it starts to make sense, which is why I've started to open up those long positions, right? So if you do want to follow along, also there is a link in the description below where you can sign up to Bybit. If you do want to follow along, claim up to $30,000 in sign-up bonuses, feel free to join in. That's the plan of action. That's what we're looking at over there. And if you look over here, also, I'm on the hourly chart just a couple of hours ago. You can see the aggregate futures order book liquidity delta went negative, also indicating that the market participants are attempting to short the market over there. So we're waiting for that bit of a short squeeze. Now, bringing up ETH BTC, it's looking pretty good over here. It's holding up. We're still attempting to reclaim the 0.055 level, which I think on the next expansive phase, when the market goes up, I think that will be the move that it gets above that level. You can see the reaccumulation taking place over here. And that's a question you always need to ask yourself. Is it accumulation, or is it distribution? Is it reaccumulation, or is it redistribution? Is it support, or is it resistance, right? Which one is it? Is it long, or is it short? Did you gain a level, or did you lose a level? Okay, those are the questions you need to ask. So if you get below the yellow box over here, the answer would be you've lost the level. And then I guess the answer would be that it's not reaccumulation, it's redistribution. And then I guess the answer would be it's not long towards the upside, but it's short, right? This is how trading works. We need to look at all these various different factors. And I know I'm talking to some of you that have a lot of experience, so I apologize for the repeats over here. But I know also a lot of you are new. So to help you get up to scratch, right, go through to Whale School. Feel free to join up over there, and that should help you. Now, total 3, I wanted to personally see a little bit of a deeper dip. It doesn't necessarily have to happen. The market doesn't always have to give you what you want, but this is essentially what we're looking for. We wanted to see a little bit of a sweep into this mid-range level, which is coming in at $556 billion mark. Which it got very, very close to. Right now, it is possible that it's missed it and it's not going to get that proper sweep. But in terms of percentage, it would have only needed to go down about another 3% to drop below that level and give a proper sweep. That's still a possibility. It's still a possibility. Pay attention, watch that level. You did break the upsloping trend line over here, which showed a shift in momentum. That it doesn't mean that it's all over. It's just a shift in momentum from moving in a strong, aggressive uptrend. It just means that you're now repositioning into maybe more of a ranging market, a longer term consolidation. But what I would say is that if you can see price get into the yellow box over here, this is where bulls truly start to take back control. It's a discount zone and a premium zone. You want to divide your charts up like that, right? So we have a broader range over here, this being the one part of the range. This would be the extreme discount zone, right? Then you can say this is your premium zone. This is where price is at a premium. But when you've gained a level and you started to reclaim some key levels, you can subdivide those levels up where you now have quarterly levels, quarterly level 1, quarterly level 2, quarterly level 3, and quarterly level 4, right? Quarter 3 and 4 mark the bottom part of the range, and quarter 2 and 1 mark the top part of the range. And that means price is right now in the discount zone of this range. If we start to lose that, we'll reopen this range and we'll start to trade that level. So you want to establish positions in the discount zone. That's the point. Discount zone is for re-establishing positions. Premium zone is for taking profits. And if bulls hold control in this zone over here, premium zone is also where you can start to see those bigger breakouts. So quick little lesson for you over there on different range levels. That's what we're looking at for total 3. But there's a whole lot more that we can uncover over here. One of the trades that I've taken is on 𝗕𝗓. And the reason for the 𝗕𝗓 trade was because we came into key levels of support. We buy support and we sell resistance, right? We don't sell support. We sell support if it gets lost, but we wait for deviations and reclaims of that range, which we saw at $5 on 𝗕𝗓. A buildup of liquidity on the short side coming from the top all the way down, reclaim this level, and we're looking for major expansion towards the upside over there. So that's the current trade that I'm in, right? What I told the Whale Room community, which is, of course, the private Discord community that we have over here. I've been dropping a lot of different trades over here, updated them over here yesterday. So I'll share that with you as a little bit of a sneak peek for what you get in here. I said that if you went in too heavy on this, you can reduce your risk on 𝗕𝗓 by now raising your stop loss to $5. So I'll tell you, the audience, the same thing over there. We are in slight profit. We're continuing to hold that position over there. That is the 𝗕𝗓 trade. Remember, if you do decide that you want to join into Whale Room, there's a lot of alpha here, right? All these institutional charts, which, by the way, will cost you hundreds of dollars a month to sign up to yourself. We are updating you. We're giving you our take on this, and on a daily basis, multiple times a day. Actually, we're showing you exactly where the liquidity is stacked. So if you do want to join into Whale Room, there is a link in the description below as well. And then Whale School, remember, is totally free. So that's free. Whale Room's $99 or $100 a month. Whale School is free. Okay, now let's have a look at the 𝗕𝗓 trade. This is what I'm viewing over here. If we move on to the 15-minute time frame, price is currently holding above that 200 EMA on the 15-minute time frame, but it's below the 200 EMA on the 1-hour time frame, which is a key level that it needs to get above. And not only that, you have a very key level of resistance coming into play over here. You can see resistance or support at least, then support. Eventually, it loses this level, comes back, resistance, 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 resistance. A lot of touch points into resistance over there. But you'll know that if you have done the trading school, what you'll know is that the more times you come into a resistance zone, and especially when you grind into a resistance zone, you open up the possibility of a breakout. You also learn in Whale School about ascending and descending triangles. And currently you see a picture-perfect ascending triangle, which is currently starting to develop, which opens up the possibility of a breakout over here. So although we're coming into resistance, this is one reason why I reserve the right to hold this particular long position on 𝗕𝗓. Because if we do get the breakout, well, that's of course going to clear some significant levels over here. That is going to get you above that 200 EMA, and that should lead to alone a move of 20% towards the upside, which is pretty substantial. The beauty of that trade is not only does the ascending triangle lead to a 20% move towards the upside, but it has implications into the higher time frame, which would be this on the daily, which means that now you can start to look to trade it back into the range because you confirm the deviation back above the pink zone and the breakout level, which means you're actually looking at the possibility of a 70% move, at least back to the top side of the range. So that's the current trade that I'm in. I think it's worthwhile to bid this. I think it's worthwhile to buy at these levels if a coin is coming into key support, which is what we're seeing on coins like 𝗕𝗓. We can continue, right? Let's continue on over here. So with that being said, we had a lot of weakness coming into the Bitcoin dominance chart over here. You can see a lot of selling pressure and rotation into some of the altcoins. Part of the reason why we may have seen that is because a lot of the altcoins are at key levels of support, and there's other traders out there like you and me who see the support levels, and we think that it's a better trade to take on the altcoins right now, risk to reward, versus taking the trade on Bitcoin. But the Bitcoin dominance can only confirm the breakdown, and we can only be sure of ourselves when we follow this trajectory as per my yellow lines. We need to break below the yellow circled area. Then you're probably going to get a bounce back up into this region over here, reject, come down. we need to use the yellow dotted line. That's a very, very important area. That's 52.22%. The bounce off that will probably lead into this zone approximately, which is not far off from where we're at now. And now we have the confirmation with lower lows and lower highs, the break of the rising channel over here, and we start to lose the mid-range level, rejecting off the overall mid-range because this is the range high, this is the mid-range, and this is the range low. Once we break and hold below that level, we can confirm that altcoins, in fact, are going to outperform, and we should be well on our way to profits because we bought those altcoins at key levels of support. Now, there's still a possibility that we'll end up cutting these positions. So we can't count our chickens before they hatch, which is why we're scaling in using that 5-point entry approach, which I previously spoke of. So what is the sentiment? Let's do a sentiment check on the market. And then we'll start to get into those factors and points which you need to tick off before you take these trades. Poseidon suggests this, and it's true. In 2021 top, while Bitcoin was ranging between a price level of $50,000 to $60,000, altcoins were pumping 5 to 10x. I remember clearly there were coins that you could take a trade on, and in one day you're up 100%. It was that quick. Now, while Bitcoin is ranging again between $60,000 and $70,000, altcoins are dumping 50 to 70%. At the top, people should be euphoric, but right now we're at the top for Bitcoin, and everyone is in disbelief and scared. And he says we're far away from the top. I do subscribe to that, but I also would suggest that based on the whole write-up that I did on the extreme contango in Whale Room for the Discord members there is a possibility of a deeper drawdown due to that extreme contango, which needs to revert back to normality. Now, it doesn't mean that it's over. It just means that you'd be going in for a deeper correction if we lose the key levels. And this is the final line of defense for the bulls, which is why we've been buying these zones. But if we do start to lose these zones, that changes the overall picture. And then we're going to be going in for a deeper correction. And then the 50 to 70% dumps become 70 to 85% dumps. But if this is in fact still a bull run, which as per the timing and what we're seeing in the stock market and the statistics that we have read the last couple of months in terms of the performance of the stock market over time, it should suggest we're still in a bull run, which means that 50 to 70% sell-offs on altcoins present wonderful opportunities. But why is this happening? Part of it is due to the dilution of the market because it's become so easy to launch a coin. So you need to be selective on which coins you're taking. Now, we can also have a look at things like this, right? Don Crypto Trades breaks down the dominance in a unique way over here by looking at dominance by altcoins, excluding Bitcoin and the top 10 market cap coins, which hold a massive weight in the market. This shows you what the true altcoin market is doing in terms of dominance. He says he updated the fractal over here, and what we've seen is that we're working in a very similar fashion to what happened in the prior cycle in 2020 leading into 2021 before the big expansion on others' dominance, which led to an enormous move towards the upside. So in terms of the timing cycle, we're coming in on that 100-day mark where the market becomes complacent, has lost interest, but that could be the worst possible time to lose interest because if you look over here, you're in a falling wedge formation. There you go, lower lows, lower highs. You broke the trend, started to push up, create higher highs on the others' dominance. You had a big sell-off in 2020, which led to quite a big snapback and immediate expansion towards the upside. Now we're seeing something very, very similar here. Others is caught in a range, right? Think of the range levels over here that is marked off at 8.1% on the downside and 12.37% on the top side. Well, if this starts to bounce from here, what's going to happen? We're going to reclaim the mid-range. And when you play that level to level, you want a long support and short resistance. So you're looking for price to come back up towards those range highs, which should bode well for others. Now, another way that you can do this is, as Victor says, these are part of the points, right, of things that you can look at, is you can chart your altcoin or whatever rubbish coin you're looking at against other altcoins, right, against others. So here it is, Ondo against others. So this is the others dominance. Now you take your altcoin and you measure it against others. This will show you how it's performing against all the other coins. Ondo has been a clear outperformer doing very, very well. Pendle has been a clear outperformer doing very, very well. And unbelievably, BNB, despite its enormous market cap, has also been doing very, very well. And then PEPE, which is why I previously brought up in the beginning of the show, has also been doing very, very well. These are coins measured against others that are in uptrends. So that's lesson number one. Measure it against others, so at least you can know that the coin that you're trading is outperforming the rest of the altcoins. Otherwise, there's no point in holding it, right? You're better off holding something in the top 10, which experiences less volatility, or more notably, you're better off holding Bitcoin or ETH. Okay, so why have we seen this, underperformance in a lot of the coins, where coins are dropping 50 to 70% while Bitcoin ranges? In prior times it pumped? Because there's more casinos than gamblers. Each of these coins is a casino, and each of you is a gambler. There's literally more coins than market participants right now in the market, and it's something you need to be careful of. There was an article that was written by Binance on low float and high FDV and how we got here. Now, what exactly does this mean? Low float, high FDV. Essentially, it refers to the fully diluted valuation of the coins and how much, or the tokenomics, how much of those coins are going to be coming out over time. Now, you don't want to drown in tokens. It's very important to understand what the vesting schedule looks like on those particular tokens. A bad vesting schedule would be 5% of the tokens being released on launch to the VC investors, and they are launched at a very, very high fully diluted valuation. And then they're going to release those tokens in increments of, let's say, 1 to 5% per month in a linear fashion until all the tokens are released. That will kill you as a retail investor. You guys sitting at home, if you buy those coins, you're going to drown in tokens. You become the exit liquidity. This is the important part, right? You guys have to be very, very careful out there, and you need to catch on to understand which are the best coins to buy. So lower fully diluted valuation coins mean that it takes less money to move that coin. So if you look at something like, for example, Ethereum, which is sitting at $427 billion market cap, although we have big buys which could be coming in. For example, we have BlackRock and Fidelity, which have filed for the ETH ETF approval, it has been approved, but they need the approval to actually start trading it. That might bring in a lot of new money. But in order to get this to 2x, well, you would have to double the market cap, right? And the market cap is already absolutely enormous. Whereas if you go further down the curve over here, or further down the list, and you go to coins that are further down, their market caps are a lot lower, right? Fully diluted valuation, 770 million on the number 100th coin over here, which means that, if enough money comes into the market, this will move a lot quicker. So what that means, and what we've seen, this is the reason why things like the meme coin sector have absolutely exploded, because the fully diluted valuation equals the market cap. Whereas on a lot of these coins, that hasn't been the case, right? A lot of these coins, the coins are still being released. So when 100% of the supply is released into the market, then the FDV and the market cap should be equal. It's exactly the same thing. And that's why we've seen the meme coins rally. Where's our meme coin sector over here? Let's just quickly, do I have the meme? I'll have to open that up. But this is why we've seen the meme coins fly. Now, one of the meme coins that just released out is Hamster Coin. I haven't even looked into it, but I know there's been a lot of hype on Hamster Coin, because Hamster Coin is one of the first meme coins on TON, where we know TON has been one of the coins that has outperformed the market. If you do want to trade it, our partners BitGet are going to be one of the first to launch Hamster Coin in terms of futures contracts. You can trade the futures contract over there. There's a link in the description below. Go through, check it out over there. But I want to get into a bit more stuff right here, right? Meme coins have outperformed because all of their coins are released and they have a low market cap, which means there's not that many coins around, right? Or at least to be released. There's no coins to be released. There shouldn't be any. So you're also seeing psychology within the retail sector, where they feel that they want to be able to own a lot of coins. So if in the meme coin sector, you're seeing these coins released in the billions of different tokens, you can put in $1 and you can own thousands of that coin. Now, this is a little psychological hack. It seems that retail investors tend to gravitate at least towards the top of the market cycle where the true retail degens come into the market, they tend to gravitate towards those coins. So that's another point that you can look out for is, coins like Bitcoin, which only have 21 million out there, are very, very good for the longer term investor. But for the speculator, they're not going to be buying Bitcoin. They're not going to be buying Ethereum, because when they buy $1,000 worth, they look at it and they think I own 0.0000001. They're not interested in that kind of stuff. They're interested in putting in $1 and seeing I own 1,000 of these coins. So if that coin goes to $1,000, or at least to $1, sorry, then I own $1 million worth of this token. So that's something to look at. The other thing that you have to look at is very, very simple. Is it an uptrend or downtrend against Bitcoin? So here you have Ethereum against Bitcoin, right? It's been downtrending with the potential to reverse. Let's go to one or two of the stronger ones. So let's go to TON, which has recently outperformed. We know TON has recently outperformed. In recent history, has this been up or down against Bitcoin? Okay, it's mostly been up. What about against Ethereum? Has it been up or down against Ethereum? Also, mostly up. Then that's a strong token. Any dips that occur on this token is worth buying. So you do the test again. You go through the list. Which are some of the strong coins? Let's go to another one. Let's go to one that I know is not strong. Cardano. Are you a Cardano hodler? Let me know in the chat. Don't worry, we won't dox you. No one will know. Just tell me, are you a Cardano hodler? Is this strong against Bitcoin? No, it's straight down. Is this strong against Ethereum? No, it's straight down. Terrible, right? You don't want to be buying those types of coins. This is one way that you're going to succeed in trading and investing. Now, let's go down to one that's been, at times it's strong, at times it's weak. So this is an interesting test, is Chainlink. In recent history, is Chainlink outperforming or underperforming Bitcoin? Which way does the chart go? Down, right? Lower lows and lower highs, the trend has been towards the downside. What about against Ethereum? Also, obviously, down. So there's no point in holding Chainlink. You may as well just buy Bitcoin or ETH. Let's go through to a couple more. Let's see NEAR. In recent history, is NEAR outperforming or underperforming Bitcoin? Well, it's been underperforming and recently possibly started to outperform. Let's measure it against Ethereum. Underperforming, recently started to outperform. So this could be a potential contender to look at. Let's have a look at Render, which I think has also been one of the stronger coins. So we'll type that in over there. Okay, Render. In recent history, has it been outperforming or underperforming? It's been outperforming Bitcoin, and I assume the same is true against Ethereum. Outperforming Ethereum. This is a good coin to have. These are the types of things you want to look at. You have to be honest with yourself and use objective data to determine whether the coin that you're buying for the longer term is in an uptrend or downtrend. This has truly been a trader's market. Investors have been obliterated within this particular cycle, and it's got a lot to do with how easy it's been to make coins and with how greedy the VCs have become, in terms of their vesting schedules, how they've been dumping onto the market. So these are things you need to look for. You want to look for coins that have lower fully diluted valuations, that are in uptrends against Bitcoin and uptrends against Ethereum, and that have a good vesting schedule where a lot of the tokens get released early on, and then you're not going to bleed in tokens over time. So that's something very, very important to look at. By the way, guys, I talk about this as well in Whale School. More specifically, I talk about it's important to understand as well with your altcoin portfolios when you want to be concentrated. So meaning more you're a trader, right? You're not holding an altcoin portfolio. You're concentrated in the sense that you're only holding a couple of things which are strong. And then there's a time and a place where you want to be diversified in the crypto cycle where you're actually holding a proper portfolio of coins. If you want to learn more about that, again, there is a link in the description below. But for those of you out there who might be watching this and maybe you're struggling in life right now, you don't have much money to rub together, there's also opportunities out there in the form of airdrops. Now, one that I wanted to bring up, which is doing very, very well, at least in terms of media attention right now, is Grass, right? Grass is the first AI crypto project, as per Gustavo, who is one of the top traders, or at least degen, meme coin, and airdrop farming hunters that we have out there. He says Grass is the first AI crypto project that makes some sense. It has all the ingredients right now to grow not only in crypto and the crypto bubble, but outside of crypto can onboard new participants, right? Wanting to get paid easy for getting money. I'm going to show you right now how easy this is to get paid and how you can make money, right? It's easy to explain. It's addictive. In terms of their points dashboard, there's a dashboard that you can use which will rack up points. Those points are worth money. There's a referral link, which means you can refer your friends as well. And it's in the AI sector, right? It's part of the AI narrative. And if you're watching the show, you have a mobile device. If you're watching the show, you have internet, and that's all you need. You just need a device and you need internet, and you can farm this token. Now, the token hasn't launched yet, so we call it points, right? The token will launch. They recently came out with an announcement 2 days ago saying that you should connect your Phantom wallet or your Solana wallet, obviously in anticipation for the airdrop. They also encourage us that it's not actually too late. So far, everything that they've said has been true. They haven't deviated away from their roadmap or plan at all. So what are these things worth? Well, if you come through here, you can go into Whales Market, which is a secondary market where you can buy, pre-market coins. You can get an idea of what they might be worth. You can get OTC deals. You can look at the points market and you can buy and sell points. So if you go to the points market on Whales Market and then you scroll through over here, there's a whole bunch of different things. Swell, Puffer Finance, 𝗕𝗢𝗘𝗢𝗢, Scroll, MarginFi. You want to go to Grass. When you click on Grass over there, it'll show you all the different points that are up for grabs, right? So maybe some of you didn't mine Grass and you want some because you think that it's going to be worth a lot. You can come here and you can buy some Grass tokens, right? Now, you can also sell them, and you can look over here. What's the average ask and average sell, right? The average ask is 0.00222, but if you're selling your tokens, that shows you what they're actually worth. This is the bids that are getting filled at 0.0018. Now, to give you a quick sum of what that's worth, if you had 1 million tokens, which is not that hard to do, if you've been doing this for even a couple of weeks, you should have 1 million tokens. You'd get paid $1,790. Now, for many people in the world, that's enough to cover their rent. I've been doing this for long enough that I have 100 million tokens. So let me see, what is that worth? 100, 1, 2, 3, 1, 2, 3. Is that correct, right? Is that enough zeros? 100 million tokens. Let's see. Okay, so I have $179,000 worth of these tokens at current price, and the thing hasn't even launched yet. When these things launch, they usually launch like this. They launch like this, right? If it's got a product market fit and an actual use case, which it does, because any of you at home can do it. I've turned my Grass off because I don't want the stream to bomb out over here. But you connect your you add it to your what do you call this thing, your Chrome extensions, and it would literally just run in the background, right? So I logged out just because I don't want the stream to bomb. There is a link in the description below. You have to have a link to do it, right? So I'm not here to show my link. I'm just telling you, you can't get in unless you use someone's referral link. You have to go click there, use the link, use someone else's link if you want. I don't mind, it's fine. But if you want, use that link, sign up, start to refer your friends, right? Generate your own link, start to refer friends once you've signed up, and then leave it running in the background. We're in epoch number 6 now. I don't know how many epochs there's going to be at the end of this, but right now, epoch 6 and $186,000 up already for nothing, guys. Free. Do you understand that? Do you understand the power of that? This is the power of crypto. So we can take a couple of altcoins over here. Let's quickly review the poll. I want to quickly go into the poll results over here. Let's see. What did you guys vote? Okay. So is your crypto portfolio up or down this year? There was the results. 37% of you are up, 56% are down, 7% of you trade. The 7% here are probably the big winners, because this has really been a trader's market. This year has been a trader's market because, again, holding a crypto portfolio would have been very tough. You're picking a needle in a haystack. So let me know in the comments if you enjoy these type of weekend shows. Let me know if it assists and helps you as well to understand what to look for in terms of finding the right coins and the right to build the right narratives and altcoin portfolios. Let me know if that assists you, and if there's anything else that I can bring value to show you guys what to do next. Okay, let's go through to some of these coins over here. So where is our charts? Let's go beyond this one over here. Okay, let's have a look at a couple more of the charts over here. I'll just try to remember off the top of my head other coins that were in the zone. Atom. Okay, here's Atom. Okay, Atom, we're looking at the short-term range over here. So we want to see maybe it's going to bounce off the mid-range. Let's just quickly mark that level out. There it is. Okay, approaching the 50% level. So Atom, you want to see Atom hold at $6.50. $6.50. AVAX, I see in the comments there, oof, AVAX is down bad. 9.6% today alone. Okay, I mean, it's not looking good. It's lost the levels. This is what I said you need to see. You need to see AVAX break and hold above $31 over there. AVAX is downtrending. Your next level of support is coming in over here at the mid-range at about 19, right? $19 is your next level. How's in, let's look at Injective quickly. Okay, still chopping around. We've seen with a lot of the prior bottoms as well, by the way, if I go back to Atom, we've seen with a lot of the prior bottoms over here, if you look at this, when you come into these key levels, it takes time, right? I'm on the daily chart over here. You chop around, chop around, chop around, chop around, spend time there, right? We've only just come into this level. So you need to be patient when you're establishing these positions, and you need to be greedy on your entry. Rather get it as close as possible if you're trying to catch a falling knife. Alternatively, wait for the deviation and reclaim of the levels before you go long. You don't want to just blindly long, right? Rather wait for something like this then. Wait for signs of strength. This takes time. It takes time to develop those bottom formations. Okay, Sui. Okay, middle of no man's land, Solana probably could easily come into this 120 zone. Right into that zone over there is a possibility. Let's see, Arbitrum. Okay, also Arbitrum coming into a key level over here between 70 and 80 cents. Going to spend a little bit of time over there. You need to see it reaccumulate. Okay, you got Mantra OM is up on the day. So it's the, you see how the market participants are just cycling. It's the same people in the market. No new money has really come into this market. You have to be honest here. This is why you're seeing this rotational game where one day, you know, Ondo might be down 20%. The next day it's up 20%. Now look at the real world assets. It's not moving in unison, right? You're not having this narrative where all the real world assets move up or all of them move down at the same time. It's completely random where money is just being cycled from coin to coin. This is why you're better off being a trader right now than an investor. Let's see WIF. Okay, WIF, I'm looking for a deviation over here. I'm definitely looking for a deviation. I think there could be an opportunity to look for a buy very, very soon on WIF. PEPE. Okay, also hit the key level over here. You need to break that upslope or the downsloping trend line over there, break that trend, change the momentum. Again, all of these things take time, but have you come into the key level? Yes. Did you get a bounce off that level? Yes, you did. Found support over there, you bounced off that zone. Okay, guys, you know what? Let's cut it over there. I think we've been through enough. Thank you all so much for watching. Please smash the like button, hit the bell notification, subscribe to the channel, and yeah, sign up to Whale School. I'll see you all on the next one. Have a great day. So cheers for now, guys. Cheers for now.